Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody. So let's take a look again on the gold market. In general, you can see in recent 3-4 sessions the performance stands in tight range. Market is forming kind of the flag consolidation around the confluence, and we said that in general this is potentially a bullish sign. Because if market is not dropping out of the strong resistance and it's just calling around, it means that it's building an energy for a possible coming breakout. This should be treated more as a bullish sign rather than bearish. But here we have some tricky moment, at least from the psychological point of view. So I have mentioned it already in today's Forex report and tell us again. So tomorrow Fed starts, at least officially, the quantitative tightening program. So it starts to dry liquidity out of the market and just throwing out the bonds of their balance on the open market and taking the money out of it. Yes, initially it will be not really big volumes, but in general this could make some psychological effect. With the some factors that we already mentioned in our weekly reports, it's just net selling of the treasury bonds among the foreign investors. Well, situation tends to be tricky. Besides, as you know, the European Central Bank as well stopped printing machine in European Union. So starting from the June, all supportive quantitative easing programs also stopped, and central bank starts thinking about the tightening of the rate as well. Not as aggressive as the Fed, but still, this is also might make the psychological moment. And from that standpoint of view, we are not totally denied the chance for a possible retracement here. A bit deeper, completion of some A, B, C, D action, maybe forming some minor guardrails cheaper to buy here before some upward action might happen here. Besides, from technical point of view, as we already mentioned in the weekly report, take a look on the 10-year yield. We have the head and shoulders, and market starts forming right arm. Depending on how successfully will be this upward action, whether this will be in harmony with this one, the performance of the gold market will be corresponding. So for instance, if we will get the normal shoulder level, so market could climb to 2.95 area. In this case, the pullback on the gold market probably happens. But if market failed to do this and start dropping immediately, moving the interest rates, pushing it lower, in this case on gold, it's also upward action might start also immediately, some breakouts. But unfortunately, guys, in the current circumstances, it's very difficult to predict what will happen, and especially when we also will get important statistics for the week and non-farm payrolls on Friday, some other important data as well. That's why initially, since we still have the hand and shoulders, market stands at the resistance, tightening program stands on the way, we think that we should take the careful approach, and probably still makes sense to consider the CBCD pattern that still might be formed with this very attractive level for entry. So we have confluence 1833, 1837, 1838, and OP target right between them. So that would be perfect combination to consider taking the long position around this area. Yes, we could miss the opportunity if market will start turning up, because in fact, if you take a look at the hourly chart, we have the pennant, some kind of the wider. This is flag pattern that I mentioned, but also let's take a look in consideration greater performance, longer term performance. We have the triangle, the pennant combination, which potentially could lead for a breakout. And here's actually your homework that you have to do here. First of all, you have to monitor the price performance inside the pennant. If we get the earlier downside reversal right there, this market will not be able to reach the upper border. That will be the sign that we are correct in our suggestion that probably we should get this ABCD pattern to the 1833 area. If market starts breaking it up, it could mean that we could get the butterfly with the immediate upward continuation. So the chances on the reversal here will be minimum, especially if market will taken out of this top, which means that the ABCD pattern that we have here will be cancelled. And that's the riddle that you have to decide for yourself, how you would like to take the position. If you would like to take the short position, this is relatively simple, as you just could stop place here, put your stop right here, because in the taking of the C point, this pattern will be erased, and so will be a clear sign that market is going higher. But with the taking long position, this is a bit tricky moment. It's just because we're watching for this level, but you somehow should be prepared for a possible immediate upward action. And well, you could consider different ways. For instance, you could minimize to take lower value of your position, but place stop initial right there and just watch what will happen. If market will drop more, you could add to average your position around the same level. Maybe you could try to foresee upward breakout using it stop with this area, hoping this will be the butterfly. But this way is not very, personally for me, it's not very attractive. Alternatively, maybe you could try to use the stop entry order. For instance, in the breakout of the C point, you could place the stop buy order. If market will break it up, you will be stepped in this area. But in this case, you also will have to decide where you place your stop. So some things that you have to think about, depending on the direction that you would like to trade. But of course, the most conservative approach, most simple and protected way is just to wait for the OP. The one problem here is that it could be not reached. So depending what we'll see on the interest rates as well, on the data that will be released. Here, as you can see, well, not really simple task on the gold market that we will have to deal with currently. So that's actually what we have on the gold. Think and decide how it would be better to you to deal with current situation if you intend to trade gold right now.